Joe Brady joins me here today. You can learn more and how to get a link to his new book, joebrady.ai. That's going to be a clickable link in the show notes. But really appreciate your time, Joe.
Thank you, Jeff.
So, well, we got to start things off. You were head of real estate for Walgreens. I mean, that had to have been a big outfit, but it's always interesting to hear your origin story. How did you find your way into real estate investing?
I came out of business school and wound up going to work for what then was part of JP Morgan and learned how the money was flowing. So it was helpful to see that. And from there, I started my journey into asset management, spent a brief period in operations and learned what I did want to do, which I think for young people is really helpful. I learned very quickly that I liked buying land, building buildings, kitting out those buildings. But then when it came time to turn over and start operating it every day, particularly in a retail format, that was probably best suited for someone else. So, I just continued to meet people, to stay curious, to find opportunities and make really educated risks in my career. In 2000, I started a consulting company that focused on retail outsourcing. Our biggest client turned out to be T-Mobile, and we wound up opening the first 2,000 T-Mobile stores around the US. So it was a pretty remarkable rollout. And based on that and the other work we did, we wound up selling that business to JLL, the big global real estate company. So I led retail there and then oversaw the banking relationships and did a whole host of things. One of the clients was Walgreens, and based on meeting people, building a bridge, I was asked to join the company to be a bit of a change agent, drive some level of innovation within the real estate group at Walgreens. The timing was good when I did go there. Yeah, I mean, I would say combination of being lucky. I mean, I've definitely had my fair share of good fortune in terms of timing. As an example, when we sold the company to JLL, we closed on January 3rd, 2008, right before the global financial crisis. So again, I'll take lucky over good. But I also think you can make yourself lucky in the way you conduct your business, the relationships you develop, and how you give back to other people as well.
Yeah, what do they say? Luck is a combination of being prepared and wisdom.
I think that's right.
So I think it's just that you were ready to pivot and take advantage of what was available to you.
Yes, absolutely. And I would say that the Walgreens role was big. When I came in, there was 150 million square feet. Probably 120 million of it was retail. So 30 million of office and industrial. And so, we were able to interact with all sorts of the real estate sectors, rather. There was a lot of activity in the capital markets. There was an acquisition of 1,936 Rite Aid stores. So that whole integration and figuring out which stores to keep, which stores to close. And then, but the biggest thing, Jack, I'll tell you, is realizing that from a technology perspective, the company was in the dark ages, essentially managing that size portfolio essentially on an Excel spreadsheet. And so one of the most important things I did was really focus on property technology and business intelligence around all of this data, right? Data is not the be all and the end all. Insights from the data are what's needed. And so we wound up building a whole platform that's alive and well today. And it's doing well. It was actually built by a friend of mine, Brian Christ. He has a company called Burnwood. And so his tool there is called Velocity. It's just remarkable. It's been able to answer questions very quickly that otherwise would have taken days or weeks to get to.
Yeah, I've been in a previous life was in IT for quite some while around project management even. And it's surprising how some of these large companies are using what you would consider outdated tools.
I think we see that a lot in real estate, particularly on the occupier side. So you would think Walgreens would focus on the real estate department. It's the second largest cost the company has. It's an unbelievable area for assets. And yet, if it comes to spending an extra $1 million in technology for the real estate department, or putting that into a store, or redoing the parking lot, or any of a whole host of other things, the real estate team generally gets the short end of the stick. And so you have to be creative and you have to figure out how to do it. I'll tell you, we really leaned on our service providers, not the least of which was JLL. The team at JLL was hired through a competitive process. I often joke that I was promoted from colleague to client, but they earned it and did a terrific job. Just because there's not funding in the budget should not be a showstopper. It's simply a constraint. And so I wasn't willing to take that as the end answer. We had some workarounds and we got really creative. But then we were able to tell the story to say, hey, we've made incremental improvements. Look what this has helped us do. And, is it worth spending 200,000 to save 50 million? The answer was demonstrably yes.
Hmm. So let's jump to your book. You wrote a book. It's called Workshop: The Consumer-Driven Transformation of Commercial Real Estate. Could you give us an overview of what inspired you to write this?
Yes, I've talked quite a bit about my Walgreens experience. And when you think about how the world has evolved, I was really had a front row seat for retail evolving from strictly brick and mortar uh, stores to what we have today, which is hybrid retail. Many call it omni-channel or multi-channel retail or e-commerce. And what we saw is from 2007, when the iPhone was released, till about 2010, we saw this dramatic increase in usage, and the consumer decided they loved spending their money and voting with their wallets, but they wanted to have control. They wanted to have agency, autonomy, and optionality in how they spent their money. And it became very, very clear that the retailers that were going to win and the retail locations that were going to win were keenly tied in and focused on that change in consumer behavior. Now, I don't know if you remember, but over 10 years ago, there were calls for the death of brick and mortar. No one's ever going to go to a store again. Everything's just going to get delivered to your home or office via Amazon. And that was just clickbait, quite interesting headlines, but it was factually not true. The consumer had something to say about it. And what the consumer said was, you know what, we're going to spend about 20% online. And that's basically between 16 and 20%. That's basically where e-commerce is today in total retail sales. And the total retail sales are 3 trillion. So it's not trivial. Now, what's interesting is ICSC, which is the industry group for retail real estate, has done a number of years of research on a project they call the Halo Report. And Halo Report has concluded that when a retailer opens a brick and mortar store, the online sales go up 6 to 8%. What's interesting, though, is when a retailer closes a brick and mortar store, online sales go down between 12 and 14%. So there's this deep linkage between online and offline, and the consumer is really dictating. I left Walgreens in November of 19 and joined a company called the Instant Group in December of 19. That was the Airbnb of flexible office space. And I thought this idea of flexibility and agility in office was on trend. I didn't expect a pandemic to happen, but 3.5 months into it, I found myself with everyone else working from home and trying to understand what that meant and when people would be back in the office. Then you started seeing all the same headlines that I saw 10 years earlier with retail about work and office. The office is dead. No one's ever going back to the office. We love working from home. We love playing golf in the afternoon. We love all these other things. And while we learned that we could all work largely work from home. That's not what we prefer. And so it turns out that we're the same consumers that for 10 years have been able to vote with our wallets and how we spend our money. And now we can vote with our feet and how we make our money and where we go and what we do. So again, all of this clickbait around the office is dead is really just that. And the truth is hybrid applies to both retail and office. The name workshop, it's interesting, workshop is a play on words. Shop went from a noun to a verb, a place everyone went to spend money to a thing they did, a thing we do irrespective of place, online or offline. And I argue that work is going through that same metamorphosis from a noun, a place we went. Office and work were totally coupled. And now work is a verb. It's a thing we do irrespective of place. It could be in an office, it could be from home, it could be in an airport, it could be in a hotel, it could be at a conference, but we're no longer tied to an agrarian schedule or an industrial era factory setting. We're in this new collar economy. And so in my book, I talk about the history of platform shifts. How has technology changed over time? What impact has it had on consumer behavior? And then ultimately, how has real estate responded? And so the built environment has been very slow in catching up. But the thing that I ask the readers to consider is that we are now in a period where the rate of change is greater than anything we've ever seen. And there's so many clues about that. How fast the AI platform shift has been upon us. How quickly Nvidia went from 1 trillion to 2 trillion to 3 trillion in market value over 6 months in 2023. Just astounding. So it's a bit of a call to arms for those practitioners in real estate or anyone thinking about making a decision about leasing an office or thinking about retail. We really have to factor in what else is happening, but ultimately the consumer is really driving the bus.
Yeah, well, I was going to ask you around trends, but you kind of beat me to it. This is kind of a big topic to unravel.
It really is. And, you go to conferences and you tend to have a bit of an echo chamber where everyone's just talking about the same thing they heard last week. And I just think we have to ask better questions. I think in this book, I've done a good job asking interesting probing questions for folks to think about. Why are office leases 10 years? Well, traditionally, whether it's office or retail, they've been like a bond, right? But if the underlying tenant in an office building is in a business where their fundamental core business is changing every 3 months or 6 months, yeah, how can you project out 10 years and sign a 10-year lease? Now, if you're a law firm, that makes an awful lot of sense. Okay, we kind of know what you're going to be doing in 5 years, maybe 10 years, who knows? But if you're a tech company and you have a background in tech, you know how fast things change. So you don't know what your head count's going to be. So there's this idea that, investors aren't going to necessarily like this per se, but there has to be, but investors conversely like and invest in hotels, which by the way, go to zero occupancy every single day. So what are they doing? They're creating an experience. They're defined by a brand. There is a commitment that you get if you go to a Hyatt or a Marriott or a Hilton or a Four Seasons or a Red Roof Inn. It just depends. And so we're going to see more and more of the hotelization of consumer related real estate like retail and office. I would say there's other areas. I'm not an expert in industrial or data centers, but that's a whole nother discussion.
Just to remind everybody, if you like what you're hearing so far, head over to joebrady.ai, joebrady.ai, and you're going to find a number of resources there, including links to his new book. Is that primarily the best place to get it?
It's available on other avenues, but it seems like most consumers go to Amazon.
Yeah. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. So, Joe, you mentioned Amazon here and that there's a kind of a close relationship to the brick and mortar and the online. It's kind of funny you bring that up because we hear the old adage like Best Buy is Amazon's showroom in some regards now. Like it's one of those situations I'm surprised where well, I guess we kind of see Amazon creeping into brick and mortar with the acquisitions of Whole Foods and a few other places. But what are your thoughts there? You seeing some other online retailers actually moving back into brick and mortar?
There have been many digitally native brands that have experimented with brick and mortar and realized that the linkage is so fundamental that they have to continue with a physical presence. One of my favorites is Warby Parker. These glasses happen to be Warby Parker. I'm just a fan. And so that's certainly part of what being relevant for me is on the retail side, where you have people talking about your brand. They started completely online. They would send 5 different frames to your house. You try them on. You would select which one you liked and send them all back with your prescription. And 2 weeks later, you'd have your glasses. Now you can still do that, but now you can walk into any of some 250 stores. I think they're around that. And you have a fantastic experience. And they have your profile that you've set up online. And you can make an appointment online. You can show up. You can have an eye test. You can do any of a number of things. And so that's a really good example of a digitally native brand that's gone into the hybrid world. So you can communicate with the brand in 2 different ways, whether it's Amazon and Whole Foods, or there's more than just the purchase, right? There's the research up front that happens. Like you said, you may go to Best Buy, you may go to Costco, you may place your order at Amazon or at Best Buy, but then there's also the return, right? The service and return. And what Amazon's done incredibly well is provide various outlets for you to return items. It's very easy to drop off at a Whole Foods. I think Walgreens also now has a program. So the full, whether you're buying it, having it delivered to your home, and then you're returning it to a physical store, or you're ordering it online and you're driving to pick it up. Target and Walmart are doing an exceptional job in and around this. They have even whole parking areas where it says buy online, pick up in store. I'm not sure why Americans have to use buy online, pick up in store when the Brits have been using click and collect for 10 or 15 years, and it's concise. But that's the same concept.
Yeah. Well, there's always, my wife and I watch a lot of British comedies and stuff, and we point out all the time, like the different terminologies. We were watching one the other night where they said up my street instead of up my alley. It's those things. It's like we're determined as two societies that we can't have similar phrases.
My daughter attends university in Scotland at the University of St. Andrews. I hear the different phrases every now and then. One of the favorite ones is to be honest. Everything starts with to be honest, as if, I guess, well, you were going to say was not going to be honest, or yeah,
Right.
that's it.
Right. Yeah. So I'd be curious then, based on what you're saying, you know, th- the online shopping, we just got accustomed, especially Amazon. They kind of recently surprised me a bit with their returns because now I can just go into a UPS store. I don't have a box. I don't have to have a label. I'd show them a QR code on my phone, and they just take the item and deal with it from there. I mean, how easier can that be? What do these actual physical locations have to do to compete with that level of convenience?
The differentiation starts to be any of a number of things. If it's Costco, it's low price and it's treasure hunt. You never know what you might find. If it's Lululemon, as an example, you have a movement, you have a brand that people want to be associated with. You have classes that you can attend in the store. It goes beyond just being a retailer per se. So the the really strong brands create a relationship and they transcend the brick and mortar walls. So they know who you are, Jack. They know what you like to spend or what you've spent in the past. They have an inkling in what you might be interested in the future and they engage with you, but they're constantly keeping up with the technology. They're turning over inventory faster. Apple is another fantastic example where they built the most beautiful stores that are the highest revenue per square foot of almost any retail out there. Maybe Tiffany, some of the jewelers, Cartier might be a little bit higher on a per square foot, but it's really what Apple has done. And what have they done? Well, it's a movement. People put Apple stickers on their cars. They want to have people see that they have an iPhone or Apple Watch or, Mac ProBook, and they'll go to a store to go to the Genius Bar to get answers, or they'll go for activities. And so that this engagement becomes really, really important.
You know, malls, for example, have experienced significant challenges, especially in competing against these places. Does your book provide a roadmap or strategies for reimagining large retail spaces like that?
Well, I do talk about some of the demalling that's happening. What we've seen work most successfully is the idea of a healthy ecosystem. And by that, I mean live, work, and play, all that are relatively close together. And that can be important and germane to downtown urban areas as much as malls. And so what we've seen is that in the mall space, the class A open air malls have done really well, right? They program all around the year. They take advantage of the holidays. They have a great merchandising mix. The B malls, are probably hanging in there from a discount perspective. The C malls are probably all, if they haven't gone away, they're on their way. They're on their way out. But what we've been seeing with some of the B and B plus malls, though, is the healthy ecosystem impact where you might see an anchor that was a Sears turn into family entertainment, right? It may become a Pinstripes or it may become another sort of concept. It may become a Lifetime Fitness. We've seen where Lifetime Fitness itself has actually built multifamily residential. And so, and then we've also seen where flexible office operators, Industrious is one that was recently acquired by CVRE completely, where, in Scottsdale Fashion Mall, there's an Industrious office complex inside, right next to the Apple store, by the way. So it becomes this blend of a community meeting place. And so if you're an investor, an owner, if you have an interest in one of those B minus malls, the question is, what are you doing to create a healthier ecosystem?
Yeah, based on what you just said there, it kind of explains the attraction of the mixed use facilities. You're kind of creating a bit of a micro community, if you will, right there.
In here, you see the coffee shops, MedTail, which is the new medical retail, whether it's traditionally dental, but now you're seeing the med spas that do all sorts of procedures. So, things that are convenient, things that thrive with good density. Lack of density generally means pain. It's not a good thing.
Hmm. One of the things that I just haven't seen recover, at least in my world, is the strip malls. They, in fact, we have some brand new ones that were built like during COVID that have never been filled. Like they still sit empty to this day. Are you seeing that in other parts of the country? And what type of reimagining do you see may have to happen there in order to make use of these spaces?
I think it really depends on the market, and it's kind of rare for a developer to go out and build a little unanchored strip center. By unanchored, I mean not associated with a grocery store on spec. I do see some of those out there, and like you, I see them empty. But what I will tell you is the grocery anchored centers, often called essential retail or necessity retail are doing quite well. They're a very, very strong asset class right now. People have to eat, even if prices of eggs are still going through the roof. People have to eat, and you tend to go to a grocery store 2 to 3 times a week. The other tenants in that center benefit from you generally driving by it almost every day, stopping in to get coffee, food, the QSRs, quick service restaurants, or the fast casual restaurants all benefit from that. Generally, there's a pharmacy, a bank. We see companies like Chase continuing to open, and they're very quickly going to be in every single state in the union. It's a combination within those grocery anchored centers of brand building and building that trust with consumers, as well as offering that convenience. And more, we're seeing drive-throughs for companies that traditionally didn't use drive-throughs. Chipotle is a good example. You can order online and drive through and pick up your order and keep going.
Well, Joe, this has been very insightful. And I don't know if I warned you of this, but we typically close the show out with a brief list of rapid fire questions. But before we get into that, is there anything we should have tried to hit on here?
No, this has been wonderful, wonderful conversation with you, Jack. I appreciate it. And, I just think I'd ask your listeners, irrespective of the industry you're in, just ask better questions and don't be afraid of technology. Harness what's out there in AI to help you do what you're doing a little bit better, little bit faster. There's some good stuff out there.
Just to remind you, joebrady.ai, joebrady.ai. That's going to be a clickable link in the show notes as well as a link to his book. But if you're ready, Joe, we'll jump into the rapid fire and close out this episode. What lie do real estate investors often tell themselves?
This one's really going to work out.
If you could go back in time and give your younger self a piece of advice, what would it be?
Collect more people, ask more questions, and don't underestimate the willingness of very senior people in the industry to give you time as a young person and show up really prepared.
Do you have a book recommendation?
I love the book Nudge. It's written by Richard Thaler and Cass Sunstein. Thaler is the Nobel laureate from the University of Chicago in behavioral economics, and his cohort, Cass, is from Harvard Law School. It talks about behavioral economics, how we can be better choice architects in designing environments for people to benefit ultimately, but nudging them to do the right thing.
And finally, what strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
AI. I actually took a course at MIT in AI and business strategy. It was over a year ago. I sat through an AI presentation about a month ago, and already I was out of date from what I learned prior year. So all of that is to say, stay on top of it. And I've found that my most useful tool that I'm using today is called Perplexity. It's sort of a catch-all of all the different AI companies that are out there. It has a fabulous mobile interface. I use it every single day and just ask questions, and I'm able to have follow-on queries. And so it's been super helpful.
Yeah. I'm actually waiting for some big player to announce an acquisition of that one because it's obviously nipping at Google's heels right now regarding a few things.
It sure is.
So, well, Joe, I really appreciate your time. Again, it is joebrady.ai. I hope you consider coming back again sometime. This was great. Great to meet you.
Thanks, Jack.